it's Martin from Real Stock Value, and today I will talk about issuing stocks. So why companies do issue stocks, and when should we buy or sell based on this information? Now ideally a company issues new stocks when it wants to raise capital to invest in plant and equipment to expand the company. Now this is a really legitimate reason to issue new stocks, and it's totally okay to buy in this situation whenever it's new stock issuance or a new IPO. The question is, okay, but why they don't borrow money by issuing bonds or directly from a bank? And the answer is that in some situations this is just not practical. Let's say a mining operation. Company finds a huge gold deposit and they want to open a new mine. However, they need a lot of capital to be able to do that. Banks will not give money for them because it's too risky. The same is true for bond issuing. So the only solution remains to issue new stocks. Another good example for this is, let's say, a new car company like Tesla, where the car company may have failed, so banks are not willing to give a lot of loans to new companies like this, and they cannot borrow money by issuing bonds either, so they go to the market and they sell some stock. In other situations, it happens quite frequently that a company without the need of new capital does an IPO. For example, in an internet company, let's say Facebook, they don't need any capital, then why are they issuing stocks? And the reason is that insiders want to get out. Now usually it's not a good idea to buy when insiders are selling. If the company is such a good investment, then insiders, why don't they hold everything for them? They could live up from profits. They don't need to sell it. Now one possibility is that they sell only a small portion of it, and this is normal. Maybe they want to buy a new house, or they have any other expenses, or they want to just to diversify their portfolio. However, if they're selling a lot, this means that something is not right. Maybe you're not getting the bargain that you hoped for. Quoting Warren Buffett here, when we own portions of outstanding businesses with outstanding management, our favorite holding period is forever. Well, based on this, if an insider is holding a great company and he knows that it's a great company, probably he will not sell. Now there is another situation when companies issuing stocks, and this is when they have some kind of temporary financial problem. Now the tricky thing about this is you never know if the problem is actually temporary or they just burning money, they're spending as much as they can, and the only income stream is actually the new stock issuance. If you are confident that actually a turnaround is coming and the problem is temporary, then this is the best time to buy. Quoting Warren Buffett once again, the best thing that happens to us is when a great company gets into temporary trouble. We want to buy them when they are on the operating table. Or put it in another way, you should buy when blood is on the street. Whenever you buy a company in this situation, the potential for high gains or high losses is there. Now there are some other situations when companies issue stocks. Some really strange ones, like company issuing stocks and paying out dividends at the same time. That's quite strange. Or they issuing stocks and giving high bonuses to the CEOs with that money. If you see any of these, then be very careful. There is one more situation when companies issue stocks. Companies issue shares for just existing shareholders. So based on the number of shares you currently have, you can buy some new shares really cheaply. compared to the market price. Now, in this situation, everybody who's buying is winning because it's diluting everybody who's not buying. Now, in this situation, you have two solutions. You need to buy as much as you can so you don't get diluted, or you need to sell everything. In this situation, a strong insider wants to get a higher percentage of the company for himself. So his plan is to dilute everybody else and get a higher percentage. The good news is that he wants a higher percentage, so probably it's a good company, it's a good investment. The bad news is that it's probably a bad management. We probably don't want to invest in a company for the long run where they're trying to rip you off. The key takeaways here: issuing stocks is normal. It's a way to raise capital. If a company is raising capital to invest in plant and equipment and grow the company, then great, you should invest with them. If a company is issuing stocks just so insiders can get out, so insiders are selling, this is the main reason, then be very careful. If a company issues some stock because it has some financial problems, it needs to pay down some debt. In that situations, you need to consider other aspects as well. It could be the best time to buy, or it could be the worst time to buy. If you find some other strange situation when they are selling stocks and paying out dividends or trying to dilute current shareholders, in that case, just run. I hope that you enjoyed this video and find it useful. If you did, please give us a thumbs up. Check out our other videos, check out our webpage as well, and see you in the next video. Bye.